day, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial opinions, and make your own financial decisions. Today is Wednesday, September 28th, 2022, and this is Blockhead Traders Weekly. In this week's episode, it's just myself, Sprocket888, and I am going to take a look at a couple of open plays that we've had going for a while. We're just going to check on them, see how they're doing, see if there's any adjustments that I'm going to make as we kind of play them out. But before we hop to that, I want to give a shout out to our Discord, link in the description below. You can hop in there, say hello to myself, Viper, a few of the other Blockhead traders. Love to hear what you're trading, love to hear the type of content you want to hear about. This and every episode is released also as an audio podcast. You can pick that up wherever you get your favorite podcast. So let's hop to this week's content. So I want to take a look back at a couple of plays that we have going. We keep tabs on the things that I open just so you can kind of see how they play out, what is going through my mind, what am I thinking about. As always, you can go to thetagang.com/sprocket888. There's a link in the description below. You can see each and every one of my trades, the good, the bad, and the ugly. I post those things up there, so they're a standing record of the trades that I made, the profits that I've taken, the losses that I've hit, and I put in little thinkings about what I was going on when we look in there. So lately we've been putting on a few different trades. I still have two of them in play, and we're going to take a look at those today. That is a play on Amazon as well as a play on Carvana. I'm going to put a link up in the description above to a past episode where we opened some of these trades. So click on that if you want to see some of the thinking of when I got into them. First up is Amazon. Now, if you recall, I like to plot out my trades in TradingView, and I go ahead and I box the colors of where I open the trade. I mark the green as basically my profit range of 100% profit. The yellow is where my profit starts to taper off. That's below my strike, but before all of my premium gets up. And then anything outside of that yellow box is really a loss from my standpoint. So this was a trade at Amazon. Opened this up at the very end of August. Opened that up for an expiration here in October. So I got about 23 days left of this. And you can see my thesis of Amazon was that it wasn't going to dive massively. I still thought it could lose a little bit of ground, but in general, I thought we were going mostly sideways or up. You can see I wasn't really correct, as Amazon has kind of did a little bit of a rally here. This little rally that we see here, these are daily candles down here on the lower chart. This is actually where I almost took this trade off, and I decided I wanted to wait so I could take it off with Viper in one of the upcoming episodes for the content. And that is where we had this massive gap down from the Federal Reserve and interest rates, and just this big market slide that ensued from there. So actually at this peak point, I was almost at 60% of my profit, and we did nothing but kind of slide from there. And you can see we came all the way down. We actually got below my strike. And so we actually got into my yellow profit zone here, and we even kind of bounced off the bottom of that. Now, today there was some positive news, and a lot of buyers happened to come into the market. I'm hopeful that this trend will continue, because you can see we have now kind of popped up out of that yellow area. I'm now back in the green, but not far from my strike. So this one is actually still a little bit underwater. Now, let me explain a little bit about why this is kind of underwater. And so I'm going to hop over here to this other chart. This is from TD Ameritrade. And what you can see here is on October 31st, this is where I entered right here. And what I want you to pay attention is this blue line down here of implied volatility. Remember, I am selling volatility. And so as volatility contracts, gets less, the option becomes cheaper. If volatility increases, the premium for that play is more expensive. And in order for me to close out that trade, I have to buy back that volatility. And so if it is expanding, then my option to buy it back becomes more expensive. Now, this is kind of a trade-off, because remember, options expire. And when they expire, they have zero value. And so as we proceed forward in time, there's this battle between what's known as time decay or theta decay and the volatility expansion or contraction. So you can have volatility expand, but if you're declining as enough in time, meaning getting closer to that expiration, that theta can eat away at that premium increase due to volatility. And so it's this kind of balancing act between these two forces and these two factors. And the volatility is a very, very impressive weighting in the calculation of the option price. We kind of did that in a previous episode of Veru, where volatility cut by 50%, the underlying fell 25%, and I still booked a profit. But what I want you to do is pay attention to this blue line down here. So as time goes on, right here, we got this big drop in volatility. This was where I was hoping to close it for that episode. You can see on the top, this is where that gap down occurs. You can see the volatility was low down here, maybe about 34%. And then we had this massive gap down, volatility started expanding, and we just slid. Now, while this is happening, volatility is going up and up and up. And so you can see down here, volatility is increasing. And so now, just before the market today, volatility was at 52%. So that is significantly higher than the volatility where I sold it at, around 42%. And so the price of the option had gone up since I sold it. Additionally, the strike, we've gotten closer to my 115 strike as we slid down. So all of these factors kind of end up putting me a little bit underwater. Now, as soon as the market kind of went today, you can see the rally started happening. We started pushing away from my 115 strike, and you see the volatility kind of fall off from that, 51, 52%. Down a little bit to about 49%. So that volatility is kind of coming in, and we're starting to move away from the strike. So I expect if this market trend continues, that value will drop very quickly in that option. Now, you might wonder why so quickly. Well, remember, there's only 23 days left before expiration. So the closer you get to the expiration of an option, the faster that time decay occurs in that option, because at that time of expiration, the value must be zero by the definition of how option pricing works. So the more value that is pumped into it, the faster it's going to be eaten away as theta decays. All right, the next trade that I had up is Carvana. So let's take a look here at Carvana. Now, Carvana was a relatively high volatility trade. I was looking for not a massive drop off in value. So again, similar to the Amazon thesis, I was looking for sideways, slightly down, up. Didn't matter as long as we didn't have a massive decline down. And so if we take a look at the trading view chart here again, this one was actually opened on September 13th. So a few days later after the Amazon trade. It was the $30 strike that I sold as a put. You can see my green is anything up here. Yellow is where I'm partial profit, and anything below yellow is a loss. And this one is not looking too good. Very similar to the Amazon pump where that thing started dropping off. That is when the Fed came out. That is when the markets really just started sliding and taking a hit on all things that are related to the general economy. Fears of recession were spiking up. And you can see that this value of Carvana held up a little bit, but then just quickly dumped down right through my strike, then through the profit area of the strike. And I continue to hold it. Now, this one came dangerously close to my bailout price, which is typically about 2 times the credit that I receive. If my loss amounts to that 2 times the credit received, I am going to exit that thing for a loss. Now, in this particular case, we're really fighting just to get back above this break even. So the bottom of the yellow line would be my absolute break even point at expiration. But because there is time left in this thing, if I were to actually close it right now, even at that line, I would not break even. I would actually be booking a loss because I would have to buy the remaining time premium that is left in that Carvana trade. So this one is not looking good. You can see I'm actually not even in my profit range now. It is kind of bottoming here, but we have failed to break out above this line a few times here. So again, this one is not looking great. We're going to keep tracking this one because where this is sitting, if it continues to stay here, the type of management that I would deploy against this option would be to do what's called roll it forward. I still have my thesis. I still think Carvana long term, this is a pretty decent exposure point to get into it. So I'm okay hanging on here if we don't dump majorly from here. And what I'll be able to do is buy this thing back, probably for a slight loss, turn around, sell the exact same strike another month out, and actually collect more premium above and beyond the cost of buying it back. So that's known as a net credit. So we'll see how it plays out, but many times that net credit, will just add on to my original credit, and I'll just keep rolling until I get that kind of turnaround and jump up into this green profit, which is the move that I'm hoping to make above those strikes. Just like we looked at the Amazon trade, let's go ahead and take a look at what volatility did in Carvana. So again, I got on this thing around September 13th, right here where we were dealing with about 125% volatility. Of course, this is where the price started dumping, volatility started expanding, and look, everything that's happened to volatility, it's only gone up, 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 up. So now we're sitting at 150% volatility. That's a massive volatility expansion from that 125 up to 150% volatility. This is really reflecting right now in the current price of my option. They are very expensive to close. I believe in the case of Carvana, my profit and loss percentage is about 150%. No, my profit and loss is about 100% loss right now. So I'm not down into that danger bailout zone of 200%. Contrary, the Amazon is about a down 50% of my profit. So they're both not looking good. However, we're going to stick with it. The theta decay is going to rapidly start expanding here as we start getting under that 21 days. This Friday will be 21 days to expiration. It closes the third week in October. That is a monthly expiration. And so we'll see how we proceed towards there. Those are the only two trades that I have out right now in the market, the Carvana and Amazon. You can keep tabs on them on thetagang.com/sprocket888. I'll keep posted in here. Also, you can hop in the Discord, say hello to myself, ask me about my trades. I'm hanging with them right now. We had some real positive move in the market today. There was a lot of buying across a lot of sectors. It was a very uniform buying up things. I wouldn't be surprised if we get a little bit of a continued rally, but also a little bit of a contraction. I do not think we are in an overall bull market for sure. I think this is kind of what they call a bear market rally. People were just hungry for any bit of good news. There was a bit of news that favored equities coming out of England this morning, which is what drove a lot of the market positivity today. But we'll see. Again, my thesis in both of these is just not a major decline. I'm not really betting on a giant up move, sideways move. Doesn't really matter. That's the beauty about options. You can make profit in pretty much every direction but one. So as long as you don't go in that direction, you'll come off green with profit. We'll keep tabs on this as we go along. It's pretty volatile out there. There's a lot of trading opportunities. I wish you the best of luck. Have fun out there. And remember, think outside the block.